Good afternoon and welcome to the FX Daily Roundup. I'm filling in for Blake today. Blake was out of town this weekend and got back in late from California, so I'm filling in. He's a little bit pooped, but he will be back in place tomorrow. So I'm going to be covering the FX Daily Roundup for today for him. Kind of a relatively quiet start overall, although we are seeing the dollar yen break higher here. But as I mentioned, we're also seeing cable a bit weaker. There's rumors, or not rumors, but potentially a rate cut, which actually has us testing down here. We'll take a look here on the daily, on the pound. You can see here we're testing the pivot. Now we actually have our European crossover webinar, which is open to subscribers, which has just hit open for the public viewing. So we did have, we were looking for support here on the pound at 30.61. I think the low was, 29.50 or 29.60. I'm not sure. Let's take a look here. Also on the, there we go. 29.60. Oh, wow. I guess we hit it on the nail. This was before we even got there, but we were looking for this. We've got the pivot, and that pivot's been in place for eons, this 29.80. And as we were under pressure, this morning, actually, I believe we were coming into the trend line at the time. And I was suggesting, hey, look, they're going to try and shoot for the pivot, which is 29.80, and take a dip just below that. And I think it was coming in right there is where we came up with the 29. You see right here, came up with the 29.61. That seems to have been the bottom. Looks like we've rallied about 30 pips off of that. And then also in the euro dollar, I've been favoring this since last week. Actually bailed out of some of it on Friday and then kept the original. And I got out of that this morning at 11:35. We actually had a resistance today at 11.42, and the reason I have it as range is even though it's been under pressure, it still is above this pivot, but losing at 11.70, we had to go in and take away that bullish mode. High today is 11.46. We had 11.42. Now the dollar yen, here's the key here on the dollar yen. I have an asterisk here because it's important. If we get a daily close, which obviously certainly looks like it's going to go and fish with daily close, that's important. It really opens the door for us to go on and move much higher, and I'll point that out. We have intraday resistance here at 10.07. Actually, I have a short position about ready to go and get stopped on that, but I'll be revisiting that post the phase one signing. But let's go and take a look at here at the dollar yen. Okay, you can see we're pretty solid here. And if you look right there, you see that right there coming across here, this close? Right there. That's where I'm coming up with the 964. If we get a daily close, that really opens the door for us to challenge much higher. Actually opens the door for us to make a run up to here, 1050. Now, we have, but with a pause here, 1007. Looking here, Asian session update, dollar yen consecutively closed above the 927 pivot in the prior week, although below the key level of 964. That's what we're looking for in a close, and that's why I had that with the asterisks. The pair needs a daily close above 964 to allow a move to 1047 with a pause at 1007. Support is a pivot of 927 followed by 902. Now we can look at some other pairs here, whether it be the peso, it's pulling back, obviously the dollar yen. One of the things that I have started to look at now is, I mean, for me, I look at a 30-minute, a 2-hour as my longer term versus a 4-hour. Most people use, some people, well, a lot of people use a 4-hour. And then of course I'll look at the daily. But what I've started to do now is because some of these runs that we get in FX don't last very long. But the time you get long, the thing starts correcting back. Or by the time you get short, it's already run its mode. So what I've started to do now is focus more on a 30-minute, still look at the 2-hour and daily for context. But I'm looking here, like if you look here on the dollar yen here on the 30-minute sheet, you can see here that I had 967 and we got this 30-minute bar. just closing just above the 967. At that time, to be honest with you, I was gonna say, you know what, why don't you just go in and cover right now? I said, you know what, I'll let it run because let's see what happens here. See if we can run to a little bit of resistance, a little bit higher, in the, you know, maybe around the low 80s or whatever. You can see it's still pushing up. So, you know, actually going with this, and bear with me one moment. Apologize. Hang on one second. Okay, apologize for that. Had got a call in. But anyway, nonetheless, getting back here is that you can see here that once we got past this 967, it actually traded a little bit quiet, and then all of a sudden it really started to pop. I mean, when it got here, it was relatively quiet, and thought, you know what, just go with it, which in this case would have been for me just to go in and cover at this point. But you can see with these, a lot of these markets, as I mentioned, they don't last very long. It's the same thing here with the cable. We had the 3046 as important. Once we actually, you know, I don't want to say gap lower because it wasn't much of a gap, but we opened lower here, and you can see as long as we're below that 3046, just go with it. And you can see the market just kept rolling back. The key, what I'm trying to mention here is that since these moves don't seem to last very long, or the duration of these moves, you can see here the peso just went right there to the 1886 here, which is key on the 30-minute, although our bias chart resistance was for 1888 here. Still a bearish mode, but that's today's bias chart resistance. But you can see here on the 30-minute, in order for this to generate further, we would have had to close above the 1886. We certainly did not. But once again, like I said, as I mentioned here, same thing you're seeing here with the Aussie, is that because these moves don't last very long, or at least they haven't, maybe eventually things will start to wind up a little better with FX. But I think in the short haul, it, at least for me, is better to go on and focus on the 30-minute charts and look for those setups here. We can see this here, like on Friday, looking at the 30-minute, we got the little hammer and another hammer, and that opened the door for us to move higher, and certainly we did. We didn't go too high at all, but I was able to leg out of an ad that I added on here, but I kept the original position. I was able to go on and get out this morning. We got up here and we did close above this 1138, open the door for much higher. But once again, try and tie that with the bias chart resistance, which is 1142. You can see that today on the European crossover webinar, which is available to the public. At this time, we do have the European crossover webinar. If you're interested in joining with the ForexAnalytix, it comes in at, we have it at 3 a.m. Eastern, obviously, hence the name European crossover, because it takes place in the European time zone. But it is recorded, and Stelios makes it available about an hour and a half before the New York Open, gives us an opportunity. And then we post a bias chart for the day's ranges. But it is relatively quiet today. The only thing we had today was employment trends today. So once again, fairly quiet market to go in and start out with. Peso has moved back up in here a little bit higher, but every move that we've made up here has seen this market just going in and sending it right back. We'll go in and take a look here on the daily. So you can see any bit of a rally, they quickly go in and sell into it. To me, it looks like this market isn't going to be happy until it gets down to 1865, this level of support, which confluences with 1862, which is 161% of this most recent failed range. Once again, some of these markets are going to go and set up once we get that phase one signing deal. Obviously, with the dollar yen, keeping the bid up. With those that are short, myself included, trying to work those stops. We did have stops above 73, and those were tripped, and the market's still keeping a bid. And actually, we're seeing that across the board. Actually, in the other yen pairs, whether it be the euro yen or sterling versus the yen, Aussie yen, you can see that right on the highs here. But getting back, as I said, the majors, it's a relatively quiet day. overall in FX, and other than, like I said, with the yen still continue to push higher, I don't think that we're going to get a lot of movement until we get with the phase one signing deal here. So I think that'll allow us to set up at that point. I don't think you have to rush in, although a lot of people are looking for a buy the rumor, sell the fact, but you can be judicious and just go with the price action. If they do get stopped out, I'll just see what they do at this point, because certainly the dollar yen is on a buy mode to start with. And when I look at I look when we did go on in fall with all the action that was going on geopolitically, the market did hold some key levels on a 30-minute, although within the context of a 2-hour chart, and open the door that it could have gone much higher. And certainly that has come to fruition. Dollar index, let's go on and finish up with the dollar index. Bias chart resistance today is 97.67, although we've had this 97.42, and it needs to get to 97.42 to spark further buying. We do have the downtrend line here, but here's the 97.67. I thought, hey, with all the support the dollar's getting, maybe we would get to that point here in the dollar index. There was a bias chart resistance. I think we did have the 97.42 for Friday, actually, or last week. But you can see we have a downtrend line. For this market, someone was asking me about it. Look, they were asking whether this was a false breakdown. I don't believe that that's the case, because it wasn't as if the market turned around and snapped back. You can see here it did a lot of homework overall down here. So I wouldn't necessarily call that a false breakout, although in order to generate a full-on buy, we're going to have to get beyond this weekly pivot, this 97.89. And this thing goes back, I mean, way back. You see him here? See here. In order for us to go full-on buy. If not, I think we're just kind of treading water until we get past this phase one deal right here with the cash dollar index. Dollar CAD, we'll take a look at that real quickly. And you can see here, we've gone and dipped back down here. We actually had our bias chart support today at 30.27. I think it was 30. Yeah, we kept it pretty tight here at 30.27 here. You know, we had a nice rally last week here. I think it was on Thursday. We had some key resistance at 31.13. It came up shy of that. I mean, I think the high was, I think it was like 31.03. I thought we might tag that 13 and then turn around and fall apart. We just kind of struggled just to get above 31, and we just sat there and we just kind of ran out of gas and started working a little bit lower. By the time the day closed, I think it closed like at 31.65 or something like that. Henceforth, we've gone and slid back down, but also this market's quiet. So you can see a lot of these majors are just simply quiet ahead of the phase one ceremony signing. We'll see where things going in play from there. Last one we'll take a look at is the Aussie dollar, which we were looking for 69.14, which had been key. Bear with me. You can see that we came right at it on Friday. This is today's bias chart resistance is 69. I think it was just, let's see, or did we push a little bit higher? No, we actually gave it the benefit of the doubt, put it for 69.42 up here. If we could add on to those gains, that 69.14 is keeping this market in check. A little bit surprising, but yes and no. I mean, you would think a little bit stronger in light of the phase one signing deal, but because of all the Australian bushfires and also weak consumer demand, there's the idea that there will be a cut in February. So it's keeping the pressure on in the Aussie. I know some are looking for much lower prices here. It's really holding steady here overall. I think probably just waiting for that phase one. Maybe we jump up in here, and then from there, we probably start to work lower as we go into the RBA decision in February. But that's all we have. Blake will be here tomorrow for the FX Daily Roundup. He was traveling out of town on a family event and got back very late last night, so that's why I'm covering here today. But thanks for joining us here on the FX Daily Roundup.